Time now for our ETF report brought to you by Invesco. I want to welcome in Cinthia Murphy. She is managing editor of ETF.com. Cinthia, good to see you again. I am curious what inflows have been like. I know we're just the first week into the new year, but we know that last year saw record inflows into exchange-traded funds as a basket. What have the inflows been looking like so far? Because traditionally, January is a month where people start to pour their money into the market.
Yeah, that's true. The first week has been, kind of average, to tell the truth. We haven't seen like a ginormous number of new assets coming to the market, but it's been pretty active nonetheless. It's been pretty focused on some specific segments that have worked well and that have suddenly gotten a boost from the outcome of Tuesday's election. So it's been a very kind of clear story or where the demand is to begin the year. But the numbers aren't record breaking in any way in the beginning of the year. It's picking up slowly as people come back from vacation.
All right, or probably their staycation, as it were, during this pandemic. Let's talk a little bit about the trends you're seeing this year. And I think a lot of them are going to be familiar to us. They're the trends we saw in 2020, probably just gaining more momentum. But it looks like clean energy is still a space within ETFs that we should be looking at to be potential winners under a Biden administration.
Absolutely. Clean energy is really a long-term story if you believe in climate change, if you believe that the future is greener. So it has actually legs long-term. In the short term, ever since the September, I think, first presidential debate is when Biden came out and talked about a $2 trillion investment in renewable energy, talked about tax credits for, green energy companies. And that started to accelerate this upward momentum. Some of these funds like TAN, for example, which is a solar power ETF, in 2020 was up like 250%. And this year is already up another 15 once the Tuesday election kind of confirmed that Biden is going to have very little resistance to really put money and put effort into developing the green energy industry. ICLN, which is a broader clean energy fund with renewables, hydraulics, and other wind and all that stuff, is also up dramatically. So I think clean energy is a segment that is poised to really benefit if we actually see the campaign talk actually turn into numbers that support these industries, because they've run up a lot in expectation of this big investment. So we have to see if that materializes. And if it does, if policy goes that way, if money goes that way, then we could see the sector perform really well going forward.
One sector that didn't perform well at all last year was the banking sector. And we're looking for that to bounce back this year, especially now we're starting to see yields rise a bit. And if inflation starts to heat up and the Fed is forced to move later in the year, we could see those financials come back. What's your outlook for those ETFs, those economically sensitive ETFs?
Yeah, banking has really struggled. I mean, obviously, the low rate environment is the biggest enemy to banks because that's how a lot of them make their money. They need that interest payment, especially regional banks, because they don't have a diversified, enough business line to get away from that need for higher rates. And a blue wave really is supportive of the banks because people expected, more government support. We saw rates go up a little bit. All this is good news for banks. But financials in general, I think, are also supported just by the general reflation or economy reopening trade, which has put investor sentiment more positive towards value stocks. And financials are the biggest sector dominating every value index out there because they're beaten down so much since 2008, really, that all these value stocks, a lot of the value stocks are financial stocks. So you combine, a more positive policy potentially outlook, you combine stimulus, you combine higher rates and the demand for the value play, which is the economy reopening play. It's just been the perfect storm for financials. I don't know how much lag there is here. I mean, we have to see how banks perform. If people continue losing jobs, it could be difficult to pay your debt. It could hurt banks. So it's not a for sure bet, but it's been a really interesting play and one that has done really well to begin the year.
All right, we're going to leave it there. Cinthia Murphy, managing editor of ETF.com. Always enjoy talking ETFs with you. Thanks.
Thanks for having me.